There's going to be some bias in the conversation. There's going to be some vested interest to talk about positive of Miami condos. We will give the truth.
There was more resale activity in the first 6 months of 2025 than in 12 months of 2024.
Joining us today is Craig Studnicky, co-founder and CEO of ISG World and related ISG Realty, with over 30 years of experience in South Florida real estate. He is also the creator of the Miami Report, the industry's quarterly pulse on South Florida real estate. Through his reports, he distills complex condo and development trends into clear analysis, making him one of the sharpest voices on Miami's evolving market.
Real estate's not static, and buyers are smart. They started to figure out two things: that some of the prices of the younger condos are high, maybe too high.
Yes.
We're looking at another record year of net migration into Florida.
Get ready for a data-driven deep dive into Miami's condo market, where new towers soar, older buildings struggle, and the headlines rarely tell the full story. From market myths to the numbers that actually matter, this is Better Decisions.
One more time round the houses, or the condos in this case. My name is David Siddons. This is Craig Studnicky. And welcome back to Better Decisions podcast. Craig, this is your third time.
This is our third
time on the podcast. The reason I think we keep having you back is not just your pretty face.
It's my charm.
It's your charm and wit. Honestly, you are one other person outside of yourself who is very, very researched in the condo market. You spend all day playing in this sandbox. It's pretty much what you eat, sleep, live, and breathe. With that said, that doesn't mean I'm not going to go nice on you. Yeah. My job is to poke the bear a little bit and ask some of the hard questions. But you are very much, you've been in this game for a very long time. For those who don't know, Craig Studnicky, president of ISG Related.
Yes. And ISG World.
And ISG World.
Yeah.
Long-term partner with different developers.
Yeah. Almost every big developer. PMG, Lennar, Related, Swire Properties. It's kind of interesting when you have that wherewithal of experience with different developers, because they all bring a certain point of view to the dance.
Yeah.
And what I bring is the stubbornness of Miami.
Yeah. And usually people will associate, okay, so here's a gentleman who's working with developers. There's going to be some bias in the conversation. There's going to be some vested interest to talk about the positivity of Miami condos. We will give the truth, but I think we're also going to highlight some of the less positive elements of the condo market, because the truth is, like all markets, it's complex.
Yes.
It's not simple. And I know we discussed this even before the camera started, that there is a lot of journalism that's rather lazy journalism, and it just wants to create clickbait content. So
real estate's also not static.
That's very true.
So that's the other thing. Things are constantly changing, not week to week, maybe not even month to month, but quarter to quarter.
Yeah.
It's a bit of an eye-opener for
and
me. And
you're
I find
just
that
coming
kind of fascinating.
Through now to the Q3.
In 2 or 3 weeks, we will publish Q3. And I've got some early
I want
tidbits.
some early tidbits on that,
Yeah,
not to kind of destroy the presentation when it comes, when you get out
not
Q3.
at all.
But I think there's some good data to come, and this is what we're going to do. We're going to reveal some of the data. So give us a pulse on the market. Like, give us an update of as you're tracking it, what have you been seeing through the last quarter and even before that?
By the end of Q2, I referenced a CNBC interview by George Perez.
Okay.
That was filmed, I'm going to think sometime in April, where he talked about the roller coaster of the real estate cycles here in Miami.
Yeah.
And he said, and he's right, it is a bit of a roller coaster, as are a lot of markets, but Miami might be the epitome of it. But he said that when the roller coaster swings back up, in other words, when the cycle starts up again, resale values get reset at a higher level than the previous cycle. And he said, I've been doing this for 50 years. I'm telling you, it's every time. Well, I went back and looked. My gut told me he was correct.
Yeah.
But I decided to do some fact checking. He's right. And I looked at the resales of younger condos, under 30 years of age, not subject to these milestones.
Yeah. What's the parameters of that not say theory, but that analysis that states that as you go through each economic cycle and you go through peaks and troughs, the next peak is higher.
Is at another cycle. So I just looked at it in real time.
Okay.
I'm here 32 years. So my 32-year gut said, oh my gosh, I think he's right. But let me look at what's happening in 2025 to see if it's in real time. Because you know what happened in 24, 23, 22 doesn't really matter anymore, because we are now in the second half of 2025, and this is what we need to start sorting out. So I looked at condo resales of condos under 30 years of age, because the stuff that over 30 years, we talk about a little bit, they have their own issues because of what happened in Surfside 4.5 years ago.
Yep.
Resales of condos from 10 million and up, from 3 million to 10 million, from 1 million to 3 million, and then I cranked it down from 500,000 to 1 million, sort of like a Chinese menu, David, of condo resales. Every single one of them there are more resales that took place in the first half of this year than in all of last year. So in other words, there was more resale activity in the first 6 months of 2025 than in 12 months of 2024.
And that was buildings that were 30 years or younger.
Or younger.
Yeah. And was there a particular age bracket of those condos that showed the highest amount of sales within that group?
Yeah, 3 to 10.
Okay, so
actually, 1 to 3 million showed the most, but 3 to 10 showed the most appreciation. Interestingly enough.
And in terms of the age of the buildings, what's the buildings that have seen the most amount of sales for this year?
I didn't crank it down to a specific building. I just looked at price point because I was trying to prove one point. George said resale values always go up. Now, there's only way that could happen is if inventory goes down. The fact that the roller coaster I graphed it. It looked like sure enough, the roller coaster is swinging back up, using his vernacular. But values always get reset at a higher level than the previous cycle. That would have to mean that resale inventory has dropped, and it did. From 2023, 2024, and 2025, you seriously low inventory, and it went from days on the market in 2023 from like 9 months, and then last year, 7 or 8 months. Yeah. And the first half of this year, like 3 to 4 months. And then when I looked at the listing prices, the average list price, and all those different price categories, from January 1 through June 30th, they were up anywhere from 10 to 15% in every one of those different categories. So when you look at the backdrop of some of the headlines that we get to read, a lot of it from the New York media that talks about Miami real estate prices crashing. Oftentimes that is a headline.
Why does that news? Why do they push that narrative? Why is that narrative coming out? Or where are they getting their data from, and where do you think that differs from the data that you're getting?
They're looking at the condos that are 30, 40, 50, 60 years of age that are subject to monster special assessments. And in fact, that inventory has flooded MLS, and the few trades that were happening in the first 6 months of this year and all of last year were at serious losses. So that's where they got it from. But they weren't examining what I did, because there is a differentiation. You see it, Douglas.
Yeah, of course. I mean, I of course, yeah. I mean, without a shadow of a doubt, if I'm looking at buildings that are now going through their major assessment, even 25 years, there's a defining difference in the minds of the buyers.
Yes. And talk to mortgage lenders. If they can't get a perfectly filled out, executed questionnaire, they won't touch those buildings. Fannie Mae and Freddie came out with that blacklist back in April, identifying like 800 buildings in the entire state of Florida. We're not touching any loans from these buildings. So you're looking for cash buyers. And David, whether they live in Boston or Buenos Aires and all points in between, they're reading about these special assessments with the older condos. So I know you're feeling this at Douglas Elliman. I'm feeling it at Related ISG.
Yeah.
My agents are telling me all the time, I got a guy from New York. I got a guy from LA. I got a guy from Chicago. He's coming to look at some condos. He wants something on the beach. But he said, for sure, don't show me anything that's old. They don't say 30, 40 years old, but the line in the sand was drawn by the state of Florida, not by me.
It's not even feeling that. I mean, 25-year, 30-year-old buildings feel almost like they're obsolete. They're just not going to be even in the conversation. Mm-hmm. They're like, I will not even look at that. Even once we get into the newer batch, so if we go from the year 2000 onwards in the last 25 years, so the ones who are just under that 25-year,
right.
I guess that recalibration, as they call it, so we're all, those guys watching, if you don't know, there was originally the 40-year assessment that we used to have.
Yeah.
That's now been shortened to 25 because of the Chaplin Tower collapse.
Yes.
And that's a big landmark moment where they'll look at the carry costs of the building and they'll say, all right, now we need to look at some of the major structural elements of this project that we'll want to replace.
As imposed by the state of Florida.
Yes.
And I have said, I was invited by Bills and Sundberg this past, I think it was back in May, to have a conversation with Representative Vicki Lopez, who wrote this law for the state of Florida. She's a lovely lady, graduate of Notre Dame, very cool lady. And I said, I think you went too far. Because, Vicki, if you think about it, buildings don't collapse. if we turn on the news and there's an earthquake in some city around the world, buildings collapse. But otherwise, when do buildings collapse? Yeah, I'll help you. Never. This was an aberration. This was a blip on the radar.
You believe this was a real anomaly and
100%.
is not reflective of what happens when buildings get really old?
Only because of my life experience. They don't collapse. And buildings talk, David. You know, think about your automobile. When the engine starts making noise, you got to take it somewhere. Buildings talk when there's a problem.
They do. It's interesting that you mentioned that point, funnily enough, because there are buildings that are very young that talk.
Yes.
Very young.
Yes, they do.
And some of them,
sometimes they scream a little.
Sometimes they scream, and you look at it, and it's like buying a lemon. You know, you want to talk about the car analogy. There are certain cars that you get, and you go, within a space of a very, even a few months or a few years, you suddenly go, this is really bad. Like the engine light's on and it's making a weird noise.
Totally. So what does it warrant? How about attention? Champlain Towers was ignored. It's so sad. I know that about a year and a half before the collapse, they spent $250,000 redecorating their lobby. But they weren't paying attention.
Yeah, what are they actually spending? So when you get to these major assessments, because I don't think anyone's really understood or dived into what they actually do at the 25-year assessment mark. Are you aware of what they do, what is required now?
Well, there was, you're right, there was the 40-year recertification, which kind of meant, okay, you got to bring the building up to code. Well, what does that mean? Well, mostly roof, sliding glass doors, windows, balconies, and swimming pools. That was kind of it. Major structural components. The milestone laws imposed by the state of Florida after Champlain are really not that much different. The problem is that they imposed them on all condos north of 30 years of age, all over the state of Florida. Well, the first thing they had to do, the deadline was extended till this December 31st. The original deadline was last December. But the first thing you have to do is hire a structural engineer, and the structural engineering company comes back, and they're always going to find things. And then they say, you got to fix this. So let's pull a number out of the air. It's $20 million to fix this building. Oops, we don't have any cash in the condominium association reserve account. Oops, we have to issue a special assessment. And that's where the bleeding begins. Because think about the irony of this. Most of these 30, 40, 50-year-old condos are occupied by retired people. They don't want to write these checks. And not the only ones. You have to get a unanimity amongst all the condominium owners in that building.
Well, that's the story now, isn't it? The story is people who don't want to take responsibility for a building that they own because they feel like, well, I'm probably not going to be here for that much longer.
Right.
So what do I care? And that lack of accountability leads us down a very, very bad path.
Yes. And they'll call somebody from the David Siddons team and say, sell my unit.
Yeah, there's a lot of product. We went down this route of looking at these older buildings for a while, and then they got to a point where I think people stopped engaging with us. They stopped asking, would I buy this? Should I buy this? Could I buy this? 30-year-old, 35-year-old building. I've had, honestly, this year, I've had a lot less of that. And I think maybe because the press is, and again, you're stating this very clearly, this product is in such overabundance and people aren't buying it. And we did this when we actually looked at, in lieu of what you're doing on your reports, we did our own report neighborhood by neighborhood. And initially I did the most underperforming condos in Miami. And it wasn't to bash anyone. It was just to state, look, statistically speaking, just pure mathematics, these buildings haven't dollar per square foot performed this year as well as last year, and they're seeing more inventory rising and less sales. That's it. That's the underperforming equation. What's happened is that these older buildings, we looked at it by neighborhood, and it's interesting that almost systematically the underperforming buildings, unsurprisingly, are these really old buildings. Right. They have so many units for sale. In some cases, like I'm seeing buildings with 35, 40, 50, 60 units for sale and no transactions.
No.
Like zero.
There you go. Exactly. There you go. So the highway got super crowded. What happened, here, I'll give you a number. At the end of Q2, there were 25,000 condos for sale in every price category, in every age category, in MLS in Dade, Broward, and Palm Beach County. 25,000. The mean number for like 30 years is like 22,000. So now you have more inventory than you should, so it strongly suggests you have a buyer's market.
Yeah. Okay,
except 22,000 of the 25,000 were over 30 years of age. You only have 3,000 condos for sale under 30 years of age in the Tri-County area. So when it comes to over 30 years of age, absolutely a buyer's market. Under 30, absolutely a seller's market when you age them. And when I finally get a chance to speak to the press with everything I just said, you can hear their typewriter quieting down. Prices of the younger condos are, I will tell you, in Q2 they leveled, they plateaued, they didn't continue to rise.
Yeah, that's
plateaued.
interesting to go into, like, what is leaving all the old stuff out the
Right.
equation, because everyone's going to focus on the newer products, and buyers are like, all right, I accept the fact I'm not going to buy an old building. Now talk to me about what I should be buying, looking just at the newer buildings. What's good, what's bad? Like, what should I be paying attention to?
Well, it's interesting. What happened with the stuff, and this all happened in July and August. Now, I don't have the September numbers yet. And it's startling to me, as we said earlier, real estate's not static. And buyers are smart. Buyers take us where they want to go. They kind of do.
Yeah.
It's not really the other way around. They started to figure out two things, that some of the prices of the younger condos are high, maybe too high.
Yes.
So what we've seen is they're calling their brokers and they're saying, wait a minute, not all this stuff that's 30 years and 40 years old is bad. Some of them are properly maintained. Some of them might have been through their 40-year recertification before Champlain Towers collapsed. We've seen sales activity now. These are buildings that were structurally that were almost perfect. They might not have had the proper amount of cash you need to have in the reserve account according to these new milestone laws. So they issued a modest special assessment, 20,000 a unit, 30,000 a unit, just to get cash in the account. If the building was properly maintained and filled with I guess a proper profile of people, a lot of those buildings got funded. So now all of a sudden we're seeing trades in July and August. And again, I don't have the September numbers yet. In some of these 30, 40-year-old buildings on the ocean, on the bay, on the intracoastal, structurally sound, cash in the reserve account. The amount of inventory, so there were 23,000 units for sale that were over 30 years, over 22 at the end of June. Right now, there's 17,000. Yes, some would say, well, people might have taken their units off the market. That's true. Some of those listings were canceled, but there's trades going on. There's actual sales going on. What I'm trying to work on, I don't have it done yet, is a whitelist. I mean, Fannie Mae and Freddie came out with a blacklist.
Yeah.
I'm working on a whitelist.
So a positive list of buildings that are
older,
oldies but goodies.
There you go. Architecturally, they might not be as fascinating as projects like St. Regis and Brickell or the Mandarin Oriental.
But they're a lot cheaper, aren't they?
Oh, they're undervalued because I got painted with the same brush. If you're over 30 years of age.
I looked at some of those, and it's amazing because once you start to look at the newer buildings, I mean, systematically in the main core of Miami is the urban core, the Brickell downtown Edgewater area.
Edgewater, all that.
And that stuff is like, it's still, $1,000 a square foot, or just under $1,000 a square foot, somewhere between $800 and $1,000. And then you've got the older product, which is down at like $500, $550 a square foot, which is really cheap. Now I find that when you get to be on the beach, when you can be on the beach at these well sub $1,000 a square foot numbers, and it's a second home, it gets very appealing.
Doesn't it though? I live, selfishly if I may, I live in a 25-year-old building in Sunny Isles Beach. It's called Ocean 2, developed by Related. Structurally, they had the lucky foresight to want to fix this building ahead of maybe their 40-year recertification during 2020 when general contractors were dying for work. So they issued a special assessment during the year of the COVID. And we got hit with, I think I got hit with a $30,000 assessment to fix the sliding glass doors, the balconies, etc. The building's actually in pretty nice shape. Architecturally, it's still pretty nice. We fixed the swimming pool last year. We're fixing the entrance now. They're modernizing all the elevators. By the end of this year, it's going to look very much like a new building, spot. Even though it's not. David, resales are $700 a foot on the ocean, 250 feet of beachfront. It's next door, like a half a block to the south of me is the new St. Regis being developed by Grosskopf and Chateau Group and D Fortuna Fortune, $3,000 a foot. Amazing that rising tide hasn't floated all the boats, but Ocean 2, Ocean 1, Ocean 3, just as examples in Sunny Isles, I think they're undervalued. I'm not saying it's because my home. I'm just looking at the values of the newer stuff. The
It's
delta
cheap
is
relative to
huge.
what's in the environment around you.
Yeah.
So when you get into the, we're having conversations about buyers or sellers markets, and,
Yes.
and the general consensus now in the media, in the market pulse, is that we've entered into a buyer's market.
Mm-hmm.
Where is that coming from? And again, I'm looking at some of the data here, but with your data that you're pulling, what's the data that you have on that statement, and what supports that?
What I'm seeing in the inventory that is less than 30 years old, it's a fair fight, I'll call it, between the buyers and the sellers. The reason I'm not declaring a buyer's market is because the prices remain high. They're not going up. They've plateaued, but the sellers are being very stubborn. They're not dropping very much.
We can talk about stubborn sellers, because I think that's something that, again, I'm on the ground selling with my team every day. And,
yes, I see.
And I've had some very direct, I'm very unfiltered, very unfiltered like you. I'm very direct. I'm like, I'm too old to start dancing around the houses and not tell people exactly what's going on.
Mm-hmm.
And I've had very hard conversations with sellers, and I've told them quite candidly, you're overpriced. Your dollar per square foot that you want does not match the sold comps. It matches the active comps, but just because everyone's running off a cliff, are you going to follow them? Those active listings are accumulating huge days on the market. They're not selling, and you're not going to sell either if you do the same thing. So you need to come in line with the closed comps. And once we do that, we're selling the property fast. But I still have seen a lot of agents who are willing to list product much higher in both the condo and the home market, by the way.
I've seen the same thing. Just to get the listing, it seems.
Yeah, just to get the listing. And I feel like there's a point where I think if you are a seller, you need to be really aware that that won't work. And if you're a buyer, obviously you're going to look at the close comps, or you should, and you should actually get some good, good counsel to show you what's actually really, really trading. I looked at the inventory, and I had my research team put together the months of inventory. Okay. And the months of inventory in Miami across the price points spreads somewhere between 17 to 37 months of inventory. We used to have dialogue about balance being kind of 9-10 months, but in a condo market, creeping up a little higher, and my researcher said the same thing to me, David, that's not great, but it's not disastrous either. Mm-hmm. We've seen much worse than that. I mean, to put this into perspective, there was times when we would see over 100 months of inventory in markets. Mm-hmm. And this is going back when things weren't so good.
Unfortunately, I have too, because I've been doing this.
You've seen it. You've seen it too. I know you have. Broward ranges from 15 months to 59 months. Interestingly enough, that as you move further up into the price point, we see more inventory. We've actually seen a raise in inventory as you get more expensive. Now, typically you would think like the lower price product is the older product because it's more affordable, it's cheaper. But once we get into in Broward, they don't have a very high condo market ceiling. Their ceiling is about 3 to 5 million. Our market is, much, much higher, but we go 8 million plus. And that goes all the way to, the sky's the limit. But their inventory's got quite high in that area within Miami. And again, we can kind of spread it across and seen it. But that kind of goes into why we've seen more inventory grow in that more expensive end. And I have a theory, and I'm going to segue it into resales versus new development.
Sure.
So,
by the way, I have seen days on the market in July, August creep up.
You have?
Oh, yeah.
Okay, so...
Yeah, my data's matching yours.
So was that...
I've aged it maybe. Maybe that's the difference, because the old stuff is... that stuff's lingering for a long time. But what was 90 days is now becoming closer to 120. It changed pretty fast.
Okay.
Even creeping up to 180.
Was that sometimes...
Which is actually
sometimes people think seasonally, they get into the seasonal conversation of like, well, it's the summer months and everyone's going on vacation and no one's buying stuff because they're too busy, being in Central Pay or St. Bart's and lying on the beach and drinking, margaritas.
Yeah.
But
how nice.
Yeah. But is that something that like last year, what was the situation last year? Like when you look at that inventory creeping up, did we see that happen last year, or is this?
I think this year there were more people in Central Pay.
Yeah.
Yeah. I think there was in the summer months anyway. However, this year there's actually more real estate condo trades in the Dade, Broward, Palm Beach County, which I find kind of fascinating. than there was in 2024 from, say, January through August. There's a couple thousand more trades, Tri-County area, actual resales. And most of that stuff is the stuff that's under 30 years of age because of the stuff we just talked about. Yeah, what's really fascinating about that for me is mortgage rates have been stubbornly high. They're starting to drop a little.
Yeah, I mean, look, the environment isn't exactly conducive to buyers being super aggressive.
Right, exactly.
Interest rates are high, and there's a lot of stuff going on just in the macro economy. I mean, you look at what's been going on with our markets, our stock market. We've had some really crazy things happen.
Can you explain that to me? They used to call it, I think they still do, unbridled exuberance. Well, Wall Street's at an all-time high, despite tariffs, despite high mortgage rates, despite wars. It's going nuts. Now
We've been waiting for, I mean, I guess a lot of people have just been naysayers have been saying, I'm waiting for the wheels to fall off. Like, when do the wheels fall off? Because it's pumped up.
It's pumped up.
And for a long time, a lot of the guys in the markets, and I know a lot of the guys over at Goldman Sachs and all these other groups who have said to me, you're getting into really, it's highs of the market. And that obviously makes often many people step back and go, I need to pause. But then the market seems to it's kept moving.
My current partner is a guy named Joe DeGrossa. He's a Wall Street guy, to make a long story short. He's here in Coral Gables. And when I ask him about it, his answer is he's not the only one with this point of view. The market has baked in anticipated interest rate drops, and it's already baked in. They're expecting 2 more rate drops, we all know, this year.
Yeah.
We could see a total of a 75 basis point drop for 2025, but they're predicting like 5 or 6 drops by the Fed next year, and a lot of those drops already are baked into the current Wall Street frenzy. So that would suggest that Wall Street will get a little flatlined by next year. Yeah. And if that happens, in my experience, that's when people start thinking, okay, my portfolio is as big as it's going to be. I've made a lot of money.
Time to take some money on the side.
I want to live in Florida. Maybe now is my time to buy that condo or that house in Florida, because I've also heard that pricing in Florida is kind of flatlined. And it's not certainly going up like it was in 21, 22, 23. It has.
No, this year was kind of flat. I think a lot of people, a lot of agents in the market, and I'm just reflecting on who I speak to out there in the field.
Me too.
And the agents say, it's been an okay year. I've actually found, when I've looked at what's been going on, we've been very busy. And I think that I've still seen a lot of people coming in, and obviously I sell a lot of houses as well as condos. Sure. But I still see a lot of people coming, and they're purchasing, and they're coming in from New York and California and other places like that, and Europe. It's important to come in on Europe
as well.
I want to go kind of get into the demographic breakdown, but before we do that, I want to get into your opinion on what you've seen in new dev sales and resales versus new dev sales, and what you're seeing there.
Well, what I'm seeing is a sober attitude from the buyers about delivery dates. These buildings are beautiful, but when you tell people the truth about when it's going to take, how long it's going to take to build these buildings, 2029, 2030 as delivery dates, I see a shift of people moving to the resale market. I know that pre-development sales across the board are slow. And the biggest culprit, in my opinion, from looking at all the data, is delivery dates.
And the delivery dates that are pushing out the furthest, if you were to characterize the type of buildings that are really being pushed out, is there a certain look, size, variable?
I would say height.
Okay.
Once you're north of 60 stories, you're looking. Well, look at. We always talk about Aston Martin. Forgetting how many units are on the resale market right now, because that's a whole nother kettle of fish.
Well, we can get into that, because I haven't made many friends on that conversation.
But your analysis isn't wrong.
Well, I'm going to get into that. That's part of the conversation of new development and recent resales. One of the things I feel is that often in the new dev market, everyone has a very short memory.
Boy, is that true. But here's a perfect example, though. I think Aston Martin is an example for two different reasons. Number one, it took 6.5 years to build that 70-story building. I've had some buyers say it took 6 years. I've had some buyers say it took 7 or 8. Either way, they know it's not.
It took longer than a lot of people thought it was going to take.
It ain't 3 or 4.
Yeah.
So that's off the table. So when you tell people the truth about how long it takes to build these buildings, they shy away from those delivery dates. If they still plunge in, I have a theory that every 5 years, your life, David, and my life changes in ways that you can't even possibly predict. It just changes. So imagine buying a pre-construction condo 6 years ago, and now you're being asked to close. I suspect conditions in your personal life have modified or changed. You don't want the unit anymore. The unit doesn't satisfy your personal needs anymore. So you know what you're going to do? What a lot of buyers at Aston Martin are doing. They're putting it on the resale market. Not because maybe they don't like the building, maybe they love the building, maybe they don't like Miami, maybe they love Miami. Either way, their lives have changed. And I suspect that history will repeat itself in 3, 4, 5 years when a lot of these buildings that are under construction get delivered. You're going to see a lot of resales immediately hit the market.
So it's interesting, getting into the resale process and, new dev versus resales. I've observed when Aston Martin was selling, a lot of other buildings like it in that genre, that period of time, again, part of that economic cycle. And maybe when we get into cycles, how long is a cycle? I mean, traditionally, we're talking 10, 12 years, something like that.
That's a bit long. My experience is like 7.
7, 8 years.
Yeah,
all right.
7, 8 years.
I think that's actually, I would agree with you. I think if we look, there is a chunk of time, and if we go back, and again, we can go back from 2024, 2025, back to when that cycle of everything that was being built in 2018, and then before that it was 2012, 13, or 2010 to 2013.
Yeah.
Those buyers back then, even Aston Martin, I was seeing a lot of South American buyers.
I was seeing a lot of Brazilians, exactly.
Well, I was going to say Brazilians. I mean, I was seeing a lot of Brazilians. I knew in-house agents who were Brazilians. I saw a lot of Brazilians going there. And there, I mean, if you want to talk about changing life, our life in America changes every 5 years. Imagine how it is if you're in Brazil or Venezuela or Mexico.
A little more frequent.
I mean, the changes are more extreme.
Yeah.
Exchange, I mean, just currency.
Oh, God, a lot.
Currency shifts are massive. Back 5 years ago, well, I remember when the currency exchange with Brazil was 2 to 1.
Oh, yeah.
And there's 7 to 1.
That's 2011, 2012.
It was 2011, 20, exactly.
Oh, yeah, no, Brazilians were buying Miami.
Everything. Every agent who was from Brazil was making an absolute killing.
Yes.
But now this cycle, it's not that crowd.
No, but who knows what may happen in Brazil? Not to get off on that tangent, but I was very surprised 2 or 3 weeks ago when former President Bolsonaro was sentenced to prison for 27 years. Now it's going to be under appeal, and who knows? But it clearly signals that Brazil's being controlled by the left.
Brazilian's controlled by a president who's got a 5th grade education. That's the problem.
I know.
And he was in prison. He himself was in prison for many years, and he came out with clearly, he didn't come out Mandela, where he was like, let's forgive everyone. He was like, I'm going to war.
Yeah, and he won. And now that and the judiciary of Brazil seem to be running the country. So now I'm sure you're hearing chirps, a lot more than chirps. I'm getting a lot more interest from Brazilian buyers that want to move their money despite the obnoxiousness of the exchange rate.
So with the new dev sales, you've seen new dev sales slow down.
Yes.
You've seen that happen in some of these towers, these big towers, when they're realizing the slowdown. Is the slowdown because the delivery dates are now realizing that they're going to be 5 years, or is the slowdown happening for any other reason?
One other reason, there's a lot of choices out there. At the end of Q2, well, it includes short-term rentals, but when you look at all new developments since COVID, in just Dade and Broward, in Miami, Fort Lauderdale, it's 137 buildings. Now there's over 145. There's a lot of choices out there. I had dinner on Saturday evening with Kevin Maloney from PMG. They're building Waldorf. Yeah. And I was elbowing him, teasing him. I said, you got so lucky with Waldorf. Your timing was extraordinary because there hadn't been a new pre-construction project in Miami. He opened in March of 21 for like 5 years.
Yeah.
Because of the overhang from...
And how is Waldorf sold?
It's 85% sold.
So he's okay. He's good.
At a good price. But he was one of one, David. He was the only game in town.
So all the other ones, all those big towers... So the other big towers that they're dealing is you've got Baccarat, you've got 1428.
Oh, you've got St. Regis. You've got Dolce & Gabbana in pre-construction.
Yeah, I went past Dolce & Gabbana this morning, and I was, it's just another. Again, I'm looking at these buildings, and I feel like I'm getting a little deja vu. I'm getting a little deja vu.
There's a reason you're getting that, David.
Yeah.
Trust your
Why
gut.
am I getting deja vu, Craig?
Trust your gut. There's too many of them right now. I honestly don't have a lot of hopes for Dolce & Gabbana or for Mercedes-Benz.
I was going to say, I was just about to say Mercedes. What's your opinion on Mercedes?
Well, It's funny. I was reading your questions last night when I got home. I watched the Miami Dolphins win their first game yesterday. I was invited by.
Although that receiver, he got his leg folded, didn't he?
Yeah,
Jesus, he's not coming out of that anytime. He's torn ACL and torn everything. Torn everything. His whole leg's gone.
Hill, he's done for the season. When I got home last evening, I was invited by Related to watch the game. Fun watching the Dolphins win. But anyway, I got home and I was thinking about this. This deals with Mercedes-Benz, but I'm gonna give you a golden nugget that I learned from a mentor of mine, a guy named Tom Daly, who this month has been gone for 13 years. He's the one that
you mentioned his name before
he taught me a lot.
Conversation.
He taught me a lot. I should have hung out with. I wish I could have spent more time with him. I wish he was here today. He was brilliant. He was the one that got George Perez from Related into the Condo game.
Yeah.
He always talked about the day in the life. When I would sit with him and he's designing a building, and I used to, he loved Charles Seeger from Seeger Suarez, and he would sit with Charles and they would argue like college roommates. And I would sit in the room and I realized I was listening to some genius arguments. Because Tom was always focused, David, on the day of a life. So let's talk about Mercedes-Benz.
Okay.
Mercedes-Benz, the way it's designed, there's 200,000 square feet of office in that building.
Okay.
There are 174 hotel rooms in that building. And then finally, there's 794 condos in that building. The two things that people don't like about condo living or apartment living is waiting for an elevator or waiting for your car from valet. Now tell me what, let alone the use of a swimming pool and the amenities. When you squeeze 5 pounds of real estate in what is a 3-pound bag, the day in the life sucks, long story short. And I feel Tom like, talking to me from the grave about this. Because one of your questions that I saw in your questionnaire was, which do you prefer, boutique, like a building that's like 50 units or a building that's 500 units? I never want to sell a building that's 500 units because I got that day in the life thing in my head.
You've captured on the day in the life. I reframe almost like, if you understand how people live, it's really getting into how people actually live.
Yes.
Not a perceived very beautifully done video or the branding, and we're getting into the branding conversation now, not into a switch and bait dialogue, but the reality of how people live. And I made this video of how to lose $1 million in the condo market.
I watched it a couple of times.
Thank you.
It was bold, but you were, again,
I put it out
not
there.
Wrong.
I put it out there, and the thing that I really come back to every single time, which is beautifully said to the day in the life of, because I think if you're watching it out there, really think about what your day in the life would be like in a particular building, the real reality of it. And I think that when people often move into these buildings, these new buildings, they're sold on a perceived dream of what they would be like. And in that dream, they're better looking, they've got more money, they drive a nicer car, and they have a much more fun day than they would normally have.
Their neighbors are perfect human beings. Right?
Exactly. There's a whole suggested narrative that comes with that. And I feel like part of the responsibility lies both with a smart developer to really talk about what you're getting, and from the consumer to be smart enough to not just drink the Kool-Aid and be childish in your decision making. Because I do sometimes feel like some of these marketing ploys, they're a little childish. And I look at how you live. At the end of it, I think my list was this: successful buildings across Miami. First and foremost, the floor plan has to work. You've got to be in the unit and you've got to be able to live in it. Yes. Not rent it, not have your suitcase on the floor, but actually have a closet that you can use.
There you go.
Secondly, that you're operating day-to-day movements, going up and down the elevator, getting into your car, going to the gym, going to the pool, all these other things, is a reasonable time limit. The quality of our life is directly in proportion to the time it takes us to do things that we want to do. So I did a thing with schools where it's actually a study. If you put your kids in a car for more than 45 minutes, it's proven to create depression, anxiety. That's just a medical proven study that they did, and it's shown. The ideal time is 20 minutes, and 30 is okay, but beyond that, they start to lose sleep because they're not sleeping enough.
For parents too, I'm sure.
For parents too. But it got interesting that when you actually start to look at those real variables of how you live your life, you start to realize very quickly that time is your greatest asset.
Oh my gosh, yes.
And if you're spending your time doing things that suck, quite honestly, then you're not having a very good life.
You get irritated from your own building or from your own floor plan?
Absolutely.
Oh, good.
So the floor plan has to work. Then the next thing that matters is all about the quality. One of the things was the quality of the finishes. I'm not sure if I'm getting the exact order, but finishes were important. And there's a promise of quality of finish that sometimes doesn't get delivered because it's based off a perception of quality within another genre or another area. So I'm not trying to point out Mercedes here, right? But there is a certain association with a lot of brands that there is a luxury involved because it's really well built and it gives you a sense of quality and luxury. And if I sit inside a certain car, there is a certain ergonomic to the cockpit and there's a certain feel to it, and just the feel of the steering wheel and the quality of the leather and the stitching and all the other things that kind of come together, and the dashboard with the in-screen entertainment system is all perfectly appointed to allow you to not have to think too hard. Everything just works.
So says the brochure.
So says the brochure.
Right.
Now, when you start to translate that quality into something that actually has nothing to do with the first genre of the first industry that you're in, where's the connect? It clearly, to me, there's just this big chasm of big leap of faith.
Yes.
One does not associate necessarily with the other.
And you've been here long enough from the $1 Million Mistakes video that you produced. I say this with all due respect. You've learned a lot. Because there is a chasm. There is a delta between the promise and the delivery. There is. And the day in the life matters. Floor plans matters.
Yeah.
Finishes matter. And how do you know you're really getting something from the brochure that could ultimately be delivered in reality? In my opinion, that's track record of the developer.
Yeah.
That matters a lot.
So you've known developers for a long time.
Yeah.
So why are they so obsessed with brands?
Oh.
Why are they so into this?
Well, it gives them, in my opinion, it gives them a huge punch when they open the project. For example, let's talk about Related, just as an example. They have two St. Regis's, one on Brickell Avenue and one in Fort Lauderdale to BMR. Yeah. When you tell people it's a St. Regis, you open up a big door to potential buyers that have respect for that particular brand. I think the gold standard of hospitality brands is Four Seasons, which we'll talk about a little bit.
Which has done very well.
Done extremely well. All over whenever you branded Four Seasons, St. Regis is right on the heels of that.
It's almost like you said, it's a brand of it. You don't even have to question. It's almost like a gold stamp, and it takes a lot of the heavy lifting out of your mind to say, okay, I know I'm going to get quality.
It's a real promise of trust. And these brands do impose, I do know this, particularly the hospitality brands, not so much the car brands.
Yeah.
Not so much the Aston Martins or the Mercedes-Benz.
Yeah.
It's the hospitality brands that do impose on the developer certain specifications that forecloses the developer from what they call value engineering. I can substitute the kitchen for equal or better quality. Well, the brands don't like that. If it's equal or better, but not sub. So the brands actually are a bit of a police.
So they don't do the high level hospitality brands, the St. Regis's and the Four Seasons, do not do licensing agreements.
No,
they do partnerships.
They do partnerships. Now that's it. You just nailed another key point. Is it a licensing agreement or is it really a partnership? If it's a licensing agreement, think of the old Latin caveat emptor.
Yeah.
Because when that licensing agreement expires, you just got a condo, and you're on your own.
Yeah,
you're on your own.
And the licensing agreement doesn't necessarily, and we've said this on our other videos, but it's always worth repeating, it doesn't guarantee that they're going to deliver what they say they're going to deliver. They're given a lot more leeway to move the goalposts should they so wish.
Yes.
So when you've got a building...
So to answer your question, what the real benefit to the developer is the marketing punch, especially at the beginning of the project. It sets the tone, it creates trajectory, it creates momentum, and it usually that's the biggest reason it's so successful, and it does help you differentiate yourself from the other competitors.
Yeah,
it does get a little complicated for the sales and marketing companies to differentiate the difference between these brands. What's the difference between Four Seasons, St. Regis, Mandarin? It gets a little complicated.
Well, within brands, you've also got sub-brands as well, because within companies, you've got multiple brands that coexist.
Yeah, there's a project that's coming next year, as an example, in Aventura, which is an Autograph. Well, that's part of Marriott.
Marriott. I was thinking of Marriott because Marriott own. What do Marriott own? They own a bunch of different brands.
They own St. Regis. Yes. They own Autograph. They own
Ritz.
They own Ritz.
Yeah.
And they own Signature. Right.
Okay.
Yeah. So they own all those brands. But there is a different level of management, and design criteria attached to each level of the brand inside Marriott.
Yeah.
I know I've had some experience working with them, with Related on St. Regis.
So with the brands as it is, the pullback, and this is segueing into my next point, with the pullback of big brands or the pullback of buyers who are now being more hesitant, because this is where we were originally talking about the buyers being a little bit more cautious about what they're buying, and these big towers seeing a slow in sales, and the timeline it takes to complete these buildings taking longer, which gives people more pause for hesitation because, as you said it, A, they don't know what their life's going to look like in 5 years from now, and point number two, the longer it goes on, maybe the more time the company, the developer has to tweak the project.
Yes, and when it's branded, as I try to emphasize, the brands don't leave a lot of leeway for the developer to tweak the finishes. They has to pretty much deliver what he promised.
Regardless of the economic environment, it
yes.
is what it is.
And that's part of the reason, by the way, salespeople need to explain to buyers. That's part of the reason the prices are a little high. You've been branded by one of the best hospitality brands in all of the world. And honestly, this building is going to take a while to build. The cost associated with carrying these buildings for 5-6 years is enormous, but it's worth it, especially when the buildings are in extraordinary locations.
So when it's worth it, how does a buyer quantify it's worth it rather than saying it's great, why don't I just wait till it's finished? Because that's part of that's a narrative that comes up quite often.
Yeah.
Especially when you've got a 4 or 5 year wait.
Yeah, that's where I try to help out by showing appreciation rates of what has happened. In a given 1 or 2 year period, you might be playing the right poker hand by waiting. But in a 5-year period, you're not, because the prices will go up. And even when you have a resale opportunity within that building, the unit that you probably want might not be available. And if it is, it's going to be a substantially higher price.
So the types of buyers that we deal with, and getting into this point that I was putting here, end users versus speculative investors. Speculative investors, it's more about, okay, I can put my money over here in a building, and I can wait 4 years, but it could be 5, and I've got some financial upside. Or, again, if I look, sometimes people will say, well, I put my money in the markets. Imagine if I put my money in the market 4 years ago.
Yes.
Nothing beats that. But, you've got to then kind of figure how good you are at one asset class compared to another.
Point.
The buying crowd that we've got now seems to be a little less financially motivated. They're less about how much return I can get and more about, am I getting what I want?
Yes.
That's
been my experience too. The length of time it takes to develop these buildings combined with the deposit requirements from the developer, you've kind of separated the wheat from the shaft, the end user, the ultimate end user from the speculative investor. I'm not seeing a lot of speculative investments.
Yeah, who are you seeing? Who is buying Miami right now? Is it end users or speculative investors?
When it comes to the high-end branded condos, they're by far more end users. Now, they could be second home buyers. They might not be leaving New York. They might not be leaving California, but they're planning on it eventually.
So they're not 365, but this is
and that's half of it. The other half are absolutely moving here.
Yeah.
I'm sure I've had this conversation with Jay Parker from Douglas Elliman. Before COVID, I think we all saw like 1 or 2 California buyers a month. You're seeing that every week now.
I spend a lot of time playing in neighborhoods like Coconut Grove, where most of the people who are buying condos with me are moving here and it's a primary residence.
Yes. Yep.
It's not a second home. I sit on the as one of the sales directors of the Well.
Yes.
And almost.
I saw your presentation on that.
Thank you.
By the way. I thought it was very well done.
Thank you. By
the way, you did do a day in the life without maybe even consciously.
I wasn't actually consciously doing it. I was just trying to portray what life would be like.
The way you were explaining it, I'm like, I could live there.
Yeah.
Because I could imagine myself living there. That's how I sell real estate when I'm selling pre-construction for developers. Let's slow down. Let me walk you through how this works every single day in your life.
Well, I think there's a certain point when we look at certain buildings, and I think this comes down to one of the most fundamental points, which is replaceability. There are certain buildings that are really not very replaceable. Over the years, we look at buildings like Continuum. We look at buildings like 87 Park. We look at buildings like Park Grove. No matter what you do, no matter what you build, you're never going to have a replacement for that product.
Right.
And there is a solid number of people who will literally say, if I don't buy this, I can't buy anything because this is the only thing that I can see myself living in.
Exactly. And first of all, you'll never get the land again. ever.
Yes, yeah.
You know, that by itself. And
So you can't wait for that opportunity to come up. You have to wait for either someone to sell a unit or you have to find an alternative. But I think that with certain buildings we found, and again, you know, I've looked at the Grove and I've looked at Park Grove and I've seen the movements of Park Grove A line and other lines in the Tower 1, and I've looked at the movement of 87 Park, and I've looked at Continuum. Even today, it was last week, I was in, it was a simple 2-bedroom unit, 1,600 square feet, not directly on the ocean, but you can see the bay. It's got like an intercoastal view. And that was a $6 million unit. And the last one sold was 6.2. And it was only 1,600 square feet. Very nicely done. But in my mind, I'm like, wow, that's pricey. How can that command? How can someone justify buying that $6.2 million unit? And the answer came back from the sellers, so the people who own the current unit, and they said, it's really simple. We wanted a full service building that would give us the best beach experience, access to the best restaurants, in an environment where I can wake up in the morning and I live in this incredible resort. The gym is spectacular and they're just about to redo it. The pools are amazing. They have these beautiful tennis courts and this outside restaurant. It really is quintessentially heaven on earth.
They should have a real estate license, these people. That's a beautiful explanation.
Yeah, they really felt it. It was really sincere. And I realized that although that unit wasn't huge, didn't have amazing ocean views, it was just in such a prime location. And their day in their life was exactly what they wanted.
And you got to give credit to Bruce Eichner, the developer. He delivered what he promised on that building. That is an extraordinary location.
Yeah. No, and I think all these buildings give you that day in the life experience that people want. And without that, there's a point with many of my clients, and I think many of the people coming in from California, New York, who are now the ones I've sold to at the Well, either they're coming in to live or they're people who live in the Grove and the Gables or Pinecrest right now. And they say, we love this neighborhood. We love our day in the life in Coconut Grove. There's no other neighborhood that I want to have a day in the life anywhere else. And this is the only place that I can see myself being.
The Grove's so amazing, isn't it?
Yeah, it's phenomenal.
15, 20 years ago, it wasn't such an easy sell. No. I should go there today. And the quality, the profile of the people.
It's caught up.
Oh, God, it's
caught
wonderful.
up massively.
Yeah.
And I think that there are areas where you see that with certain product where it's just, there's no alternative. So
that's probably the biggest problem for developers in Brickell right now is Coconut Grove. It's hard to convince an American that's moving here to live in a congested neighborhood like Brickell these days versus Coconut Grove.
Can I tell you how many people I've taken to the Brickell area and the beach? Mm-hmm. And then I've taken to the Grove, and they've been like, "Well, okay, that's it. I'm good.
Yeah.
Here we go.
There's a vibe in the Grove that just feels so nice.
Yeah.
Where Brickell, there's two Brickels in my opinion, David. There's pre-COVID and there's post-COVID. I was selling Reach and Rise for Swire Properties in Brickell City Center pre-COVID, and I was tempted. I was so tempted to sell my oceanfront condo in Sunny Isles and move to Brickell.
Yeah.
Because it had a vibe.
It's an energy. There's an energy to it.
Yeah, and it had it was Manhattan with nice weather. But post-COVID, God, it got crowded. It got very crowded.
It's very busy. It's very busy. With that said, I mean, there is an energy to Brickell, and I think as we start to see it evolve, little pockets are going to be little oases, like the Mandarin's pocket's going to be a real oasis.
Agreed.
St. Regis are going to have their own little oasis down the end.
Exactly.
There's a lot of stuff that I really don't, I mean, we've talked about this already, so I don't want to bash them anymore, but there's a lot of stuff we really don't like.
Yeah.
But I think that
But the Grove has been the problem for a
special.
lot of these developers in Brickell. Once you take them to the Grove, there's just an energy in the air, a vibe in the place that, and a lot of the condos that you reference have these beautiful views. You know, I always tell my resale agents, look, when you bring them in, especially even these older condos, you can fix the kitchen and bathroom. You can't fix a view. Yeah. When you find a condo that looks like a good deal right now, and it's got an extraordinary view, and the building's okay.
Well, that's why we say the buildings, the views in perpetuity, protected in perpetuity, those are the ones to grab because like New York, you know, you're just going to see more and more buildings lose their view.
Yes.
Apart from the ones
that happens in Manhattan all the time.
It's normal.
And you know what? They just get used to it. But that New Yorker, David, and I'm sure you've experienced this, when they come to Miami, they're not living in that condition. They want to see water. Or they want to see
the New York's market's gone rather stale, and it's probably going to get worse from what we can understand.
Oh, you mean in New York? Oh,
New York, yeah.
My daughter...
they had a very tough time. Their market was quite soft.
And the rental market is good. The for sale market is very slow.
Yeah.
My daughter works, she's a mom of 3. She lives in the Upper West Side. Dad, I'm killing it with rentals, but I can't sell anything no matter what. Well, you're not alone. Her name's Alex. You're not alone. That's the difference. And I don't know, come November the 4th, that's the mayoral election in New York City. This young man, Mondami, gets elected. I think I'm not the only one. It's going to get...
What's the big force for you? Like the big force in the market right now that's really going to... What's going to help us and what's going to hurt us?
It's an interesting question. Last night I had the same conversation with this big investor, equity guy that does business with Related, because he thinks that the demand for real estate is softening significantly in Florida. I said, first of all, I don't know where you're getting that information. First of all,
he's probably read articles like most of the articles out there online. Knight Frank talk about a zero market, like a market that's not.
So census came out, and last year, remember, it was 1,280 people net per day moved to the state of Florida, which was a record for the state of Florida in 2024. This year, they're forecasting between 1,300 and 1,350 a day. The state of Florida, not South Florida, the state of Florida. So we're looking at another record year of net migration into Florida. Add Anna Bosovich's filter, where she says, and a lot of that is a transfer of huge wealth coming to South Florida. She's right. But there are 2 markets that a lot of people don't quite give enough credit to that are also coming. One is Europe, and the other one is the continued demand from South America. And the South American demand is influenced by the constant change in the political winds. Colombia is a mess, for example. Colombia was a mess 2-3 years ago when Petro first got elected, the current president. Yeah. But now there's bombs going off every day in Colombia. Bombs. It feels like.
So you because the South American conversation hasn't been. So let's talk about South America and Europe.
Sure.
Independently.
Sure.
Because the South American market was always something that was very, very strong within the Miami scene for the condo buyers. It was like anybody coming from South America during a period, it was all from them and none from North America. Well, that's what it felt like.
Kind of felt like that, yeah. You needed to speak a little Espanol to live here, for example.
Yeah.
I slowed way down in 2020 and 2021.
For sure.
A lot of that had to do with travel restrictions.
But you're seeing it pick up again now?
Oh, significantly. Argentina was huge in 21, 22, 23, but they elected Milei, their current president.
It's really bad for Argentina right now.
It's bad, but he's doing a pretty good job, and now I'm seeing a lot of Argentines that we're investing in Miami, reinvesting in Argentina right now. It's okay. You know why? Brazil's popping up. Colombia is bigger than ever. Peru and Chile are there, and Mexico is the gift that keeps on giving. So you don't discount the Latin American demand. It's grown significantly in the last 2 years. I would say if it continues to go like it's going, in 2026, probably 50% of all real estate sales in Miami anyway will be Latin-based.
Really? Yeah. That's interesting.
It's because, David, I'm just watching the momentum.
So Miami is still, it still represents the top of the mountain for those people who in those countries who want a second home.
Related has seen so much of it. As an example, they've invited me to go to Bogota in 2 weeks to present the Miami report. And then they have me going to Mexico City at the end of October to present the Miami report. And then they have me going to Sao Paulo, Brazil in the middle of November to present the Miami report, to present what you and I are talking about right now. Because there are some Brazilians that are also, reading the wrong headlines and drawing the wrong conclusions. And I'm just there to present data.
And the wrong headlines to you say what?
Prices are going down, basically. There's too much inventory and prices are going down. So if prices are going down, there's no urgency to buy. I'll wait.
So there's a lot of, on YouTube, I mean, obviously this channel goes out on YouTube and I get a lot of people who, there's certain individuals who will just always make comments under my videos. I don't tend to read it. It's like, if you've got that much time on your hands, then enjoy your mum's basement, as far as I'm concerned. But there's a lot of, harsh.
I totally get it.
Harsh, but there's a lot of stuff like you really have something better to do with your life. But there is some comments out there that obviously people see these videos and the ones that get the most clicks, the ones I've seen, and I just feel like it's good to kind of talk about this, is that Miami's got too expensive. Mm-hmm. I came in, and again, there's a lot of people in their 20s, they say, we're coming in, we tried it, it was too much, too expensive, I'm going to leave. I'm going to go somewhere else. And it's like, we tried it, it didn't work. Is that to be ignored? Or how should we comment on that?
I don't think it should be ignored, but I wouldn't lose sleep over it either, because they're being replaced by other people that want to come here and can handle it. particularly from the Northeast U.S.
So it's like, I'm sorry you don't have the budget. It's terrible. I'm sorry you don't get, the salary isn't high enough for you to live here. But the reality is economically, there are people who will replace you.
Yeah.
So the population isn't going to, it's not going to soften. It's not like you're going to leave your apartment paying $5,000 a month and that apartment's going to be empty, because the moment you leave, someone else is going to step in and take it.
Yeah, and where are you going? Where are you going to go? Georgia, the Carolinas, going back to New York? They came here for the lifestyle and for the new opportunities, and the new opportunities remain, and they just keep growing. Mayor Francis Suarez, his last month in office is November. He's been our mayor for 8 months. And
it is. It's been that long.
Yeah, I find it sad. I mean, because
I know you're close with him. You've chatted with him a lot. I've met him so many times now.
He is. Is he not a great salesman?
It's funny. He came.
I mean that with respect.
I showed him a different bunch of houses, actually, ironically.
Oh,
so if he's watching this,
he's a hell of a guy, right?
And
his wife Gloria is lovely.
No, lovely.
Lovely.
But it was fascinating because I can't believe it's been 4 years.
It's been 8.
Is it 8?
Yeah, or 6.
I don't know. 6. He's still so young. So
no, he's in his mid-40s. Oh, his future is wide open. But yeah, November's it, and he sold Citadel and all these other Fortune 500.
Do you think we're in good political hands? I mean, this is slightly off topic, but again, he's about to finish office, right? As we move forward, do you think that those in power and running our city's infrastructure, do you think they get it? Do you think they're moving in the right direction?
I think they're generally moving in the right direction, but it doesn't mean I'm not concerned. He had the big picture in his head, and he sold it so well, and everybody kind of got behind him. My question that I don't know the answer to is, who's going to fill his shoes? You need what he proved to us, I think he proved to us, is you need these heads of state, if you will, because he was the head of state of Miami. They have to be salesmen. They have to sell the vision.
Yeah, that's what I was actually going to say, exactly that. It really is. Miami did an incredible PR job. An incredible PR job of selling the vision, the lifestyle. The day in the life sold was, I guess this conversation seems to be revolving around understanding the day in the life. It's not affordable for everyone, but those that can afford it, it's a pretty good damn day.
Well, and Miami may not be affordable for everyone, but then you go to Broward County and the prices are half of Miami.
Yes, they are a lot less.
We're talking about like Fort Lauderdale.
Yeah.
We're talking about 20 miles.
Fort Lauderdale is around, I looked at that, even the new construction stuff. You've got stuff that the resales, top end of the resales is like the Paramount, Four Seasons around 2,200 a square foot.
Oh, yeah.
That is cheap by Miami standards.
Pre-construction St. Regis BMR is $2,300 a foot.
And if you look
at on the beach, it'd be double.
Four Seasons Surfside,
on Miami Beach. I saw your
6,000 a square foot.
Yep.
I mean, it's a wild number, and I do recognize that it's to a lot of people, they come in and they go, wow, that is really high. Really high relative to
Hollywood, Florida is starting to pop with a bunch of developments. Hollywood, Florida is half of Fort Lauderdale.
Yep.
So Miami
Pompano, Hollywood.
Pompano.
Really.
Forgive the expression, but Pompano's popping.
Yeah.
You've got 4 major brands there now. You've got Ritz, Waldorf Astoria, W, and
we cover that
Casa.
market too. With all that going on, there's so much happening that I do think that, my next point was affordability and pressures. Actually, before we get into that, I almost forgot. We mentioned the South Americans. I didn't even get a chance to talk about the Europeans.
Oh, sorry, yes.
The Europeans. I do want to move on from that into the affordability conversation. But the Europeans, I just got back from the UK, and I told you, I'm a Brit, and I love the UK, and I'm very proud of being from the United Kingdom. But it does make me sad. It really does make me sad right now. I feel like there's so many things that aren't working well in Europe, and I think money's being spent really badly in many places. And it just doesn't work. It's just not working.
David, I have often been asked by developers in the 32 years I'm living here, what about Europe? What about Europe? What about Europe? Maybe 4 or 5%, 6% of your annual sales. It's changing this year. I'm going to say you're not quite at double digits, at least for related ISG sales, but I'm getting Italians, I'm getting French, I am getting a lot of the English, who are dismayed over the fact that the political situation in Europe is also shifting to the left. They like that Florida's now a red state. They like that.
Yeah, there's that saying, isn't it, that when everyone goes left, people go south.
Yes.
Is that the saying? Something like that.
Look at California. California's as blue as New York. It could even be bluer. But the Californians you're selling to are red hats. They like the conservative nature of the political situation here. And it's yielded to Florida even being a wealthy state. I mean, you got Governor DeSantis even floated the idea of maybe we eliminate property taxes.
Yeah, that was a I mean, nice idea. I don't see that.
I was never in favor
not
of that. Not
logistically possible
exactly,
to do.
no.
I mean, it's maths. I mean, like
exactly.
You
But
you got to get money from somewhere.
But he could throw it out there because we have a lot of cash reserves there.
I mean, it was a great PR conversation.
Yes.
I mean, again, if you want to get people's attention, you make a statement like that. But I don't think it's
and then watch property values go crazy.
But I do think like 10,000 Brits left last year. 16,000 again. I haven't polled this, but this was what came out in the press. 16,000 left in 2025, and they left for places like Dubai and Portugal, Monaco, and the US. And Miami has become a very focused location for Europeans. And I think I have a much better understanding why, now that I've met so many of them coming across. And I came here in 2007, so it's been a while for me. But I think the reason that they get it and they like it now is because their day in the life, their experience of being here and living here and what life could be like here doesn't revolve around an environment that feels alien and unusual, where everyone's speaking Spanish and they're not from here and they don't know how things are working, and it just doesn't feel like a city that they can assimilate into. It does now. There is so many Europeans, so many Brits, so many French, German, Dutch, whatever you can think of, all through Europe who are here. And they are able to have a very European lifestyle, if you want to kind of call it that, optimal lifestyle, very Dubai-esque in a way, but with a lot more normalcy, if I want to call it normalcy. I feel there's Miami, as we know, is 19 different villages. It's not one homogenous blob of South Beach. No. You know, you come into areas like Coconut Grove, Coral Gables, Pinecrest. You alternately go into other pockets. You might go to Fisher Island, the Venetian Islands, Sunset Islands. You might be up in, might be on Bal Harbour and Surfside. They all have a different flavor.
And they all have a different feel as soon as you drive into them. Yes.
But there is a definitive demographic shift away from what the population felt like 10 years ago to what it feels like today and where it's going. And I think that is very, very appealing.
And you also have, adding to everything you just said, you have Mayor Suarez, appropriately bragging that the crime rate in Miami is as low as it's been in the 1960s. This place is safe. Yeah. So if you're coming from Europe, where we know that in London,
they defunded the police by 10,000 cops were defunded off the streets of London, and the crime went.
And the fear is if Mandami gets elected mayor in New York, that's going to happen in New York. Yeah. They come to Miami, and the South Americans, they live in constant fear of crime, kidnappings, robberies, what have you. Everybody that comes to Miami feels safe. I was at that football game last night, and I was feeling this, like, wow, this feels like such a family-friendly environment with 65,000 people, and you don't feel a hint of danger.
So when you get it right, living in Miami is amazing. But if you get it wrong, where do we have to guide people? And I think this is where the value add comes in, because, again, it's very easy to sell the dream. It's very easy to sell the day in the life of. It's very easy to act like the opportunist or optimistic brand developer and say everything's going to be amazing because you're going to have this amazing life. But you can get unstuck if you don't buy the right product. Mm-hmm. When we get into looking at like the areas where we need to be careful, candidly, as someone who's lived here for so long, where do you worry people make mistakes, or where do you think people will make mistakes? Where's the highest risk?
Short-term rentals, for starters. I'll get to neighborhoods in a second. But the concept of short-term rentals bothers me, because a lot of my agents sold that stuff believing income projections from developers that were total fantasy. And now there's a lot of issues attached to that, because particularly South Americans that were expecting U.S. dollars, thousands of U.S. dollars every month that aren't there.
So you're talking buildings that allow short-term rentals.
Condo hotels, short-term rentals, same stuff.
Yeah.
So that's a concept of an asset class that I tell people to be very careful with. If you're buying a pied-à-terre, if you're buying a short-term rental, for example, Related's building the W in Pompano on the beach. That's a wonderful short-term rental because it's loaded with amazing amenities. And by the way, half of the short-term rental sales are to people living here in South Florida. Boca Raton, Parkland, Weston. They just want to have a place on the beach.
And the returns, I mean, short-term rentals, I always think that the hotels take such a large percentage of the profit that you tread water.
I ran a hotel for my former father-in-law 40 years ago, a long time ago, on the boardwalk of Atlantic City, New Jersey. And I learned how hotels operate. And that's how I know that most agents that are selling short-term rentals don't know a thing about hospitality. You just say 50-50. Trust me, at the end of the day, if you can get a 50-50 split from the operator, forget the line items.
Yeah.
If you get a 50-50 split, that's fair because the operator has to make some money.
Yeah.
The operator has to make the hotel work. There's two things about a hotel that you like. One is service, and the other one is the mattress. Don't forget right?
Yeah, mattress is really important.
Kind of a big deal. I mean, we're talking about a day in the life, even in a hotel. But when you're at that hotel, you want service. Those are human beings. They cost a lot of money. And you don't want a revolving door of human beings because a revolving door means they're not trained. You want people there that are there all the time that really love working for the hotel operator.
So there's a very few exceptions that have that level of quality. And then obviously it's more about you're buying it because you want to have a place on the sand that you can use. You're not buying it because you're looking to make a profit.
If you're looking to make a big rate ROI every month, you're going to be disappointed. Okay. So that's one asset class I tell people be very careful. Be very careful. And you're seeing also now the amount of resales that are popping up in MLS and the lack of resale activity.
Yeah.
Because if you own a condo hotel, and I'm thinking about buying yours, I'm going to politely ask you for your P&L from last year.
Yeah.
And that's the end of our polite conversation.
So,
but
and you would put Airbnb along with that bucket?
Totally.
Yeah, me too.
Totally.
I'd
Anything
really find
that's a short-term rental. Yeah. Well, unless it's an Airbnb single-family home, might be a little bit different.
In the right area.
In the right area.
Yeah, because there's some single family. I mean, again, they change. That's the thing. The home area, they start changing the zones, so the zoning. So it can be profitable, but then if they change the zoning, then all bets are off.
Right. Now, there are some neighborhoods.
Let's talk about neighborhoods.
Okay.
Let's talk about risky neighborhoods that have shown this year to not have been doing as well. Because obviously we talked about neighborhoods like Coconut Grove that do really well. We talked about the pockets in Brickell that people would like, South of Fifth. But where are we seeing the pockets that are problem? And is it enough to talk about the neighborhood? Or is there specific product within that neighborhood that you're saying, okay, this isn't been doing very well?
Well, let's talk about the downtown core.
Okay.
This is a little risky for me, but I'll answer your question.
Yeah, put yourself out there, Craig.
The downtown core is generally Brickell, downtown Miami, Edgewater.
Yes.
Now the design district, Midtown and Wynwood. I am very cautious about Midtown and Wynwood. I have seen resales, particularly in Midtown, be unimpressive. Like maybe even not short-term rentals, kind of they went down in value this year.
Yeah.
Midtown is an ant colony. I think it works well if you're a multifamily developer. I think it does. But as a condo buyer, let's go back to the day in the life. It's too crowded. And you don't see a lot of condo buyers making any money on the resale activity.
Yeah. Well, we saw that from the past. It's interesting. I'm glad you raised that because when we looked at all the Midtown projects, the 2, the 4, all those Midtown condo names before, they have not done well. And this is not a personal bash on them. This is just a statistical, mathematical fact.
Yes.
They did not resell well.
Ronald Reagan used to say that facts are stubborn things. So all you and I are doing is reciting facts right now.
That's what we do.
Wynwood is right behind there. I have developers that come to me and ask me about residential condos in Wynwood, and I say no. Turkey's not ready to come out of the oven.
Yeah.
It's not a residential
Is it undercooked or is it just full of salmonella?
It's... I'll politely say it's undercooked, but it's in my opinion, it's probably 5 years away before you could. I don't know about salmonella. I know what you mean though. When you drive around Wynwood, you feel like locking the doors and making sure your windows are up. Your windows are up anyway because it's always warm in Miami. But it just doesn't feel at all like I want my grandkids walking around those sidewalks. I mean, that's
it's not giving us the lifestyle that we dream of. There was a comment from a journalist that I interviewed recently. And she said, I have some deep concerns about parts of Edgewater and buildings getting built.
Well, if you're on the water in Edgewater, like Villa, like maybe one day if the addition ever can get built,
Yeah.
with all due respect. I mean, I know it's Douglas Elliman's listing, but that developer, Two Roads has an issue because of what the 3rd District Court of Appeals did to them. So my bigger point is when you're directly on the bay in Edgewater, now you've got gold. I helped Related sell Pata ESO. We sold it out like in 2021. Blended average was like $650 a foot. The blended average of resales now are nearly double
There are some
that.
parts of Edgewater down more to that southern corridor, that section. There's some phenomenal restaurants down there.
Yes, exactly.
Some really good eateries and really good energy. Around that park, just to the south of the park, there is Claw and there's an Italian, I'm trying to remember the name of it now, it fails me, but really, really, really good restaurants.
And look what's happening. So I think from a real estate, and I've been pitched a lot of developers, a lot of out of town developers that own property in Edgewater, but hugging Biscayne Boulevard and trying to convince me that the water views are great. I'm telling them to put grass seed on the land and pay the taxes and wait. It's not ready. It's not ready. That part of Edgewater needs some infrastructure improvements before. That whole area, it just does. It's not ready for residential living now.
I think when people look online and they get the presentations, sometimes when they look at developers, they should actually go in person to these sites.
Oh, 100%.
I see a lot of these remote Zoom calls going on where they're presenting, and if people aren't doing the due diligence of actually really going around the neighborhood at different times of day, they're not doing themselves a service. I say this to all my clients if they come on. I'll present with you in a Zoom, but I would say, please fly in. Please, let's go around.
Oh, goodness, yes, I completely agree with you. Yes. Spend a couple of days, drive around, get a feel for yourself.
Yeah.
There's a reason we human beings have instincts, but you're not going to be able to use those instincts if you don't come to Miami and examine the land itself. Design district is that's an area I'm loving. There's a couple of condo developers that are talking about starting something there. Now, once you're north of 36th Street, the Julia Tuttle Causeway, and you're in that part of the world, I am just, every time I visit the design district, I kind of give it one of these to Craig Robbins. I mean,
Are we going to see more projects in the design district? Are we going to see more
not
development?
very
in that
many
area?
because there's not.
It's not really zoned, is it?
It's there's not that much land available
That
for that.
housing neighborhood just to the north of that area is really developed fast.
Developed very nicely.
It's wow. It's
Yes,
it's
exactly.
amazing
So
how
if you
that's
can
changed.
squeeze a couple of condo developments in the design district area, home runs. It's uncrowded. You don't have a whole lot of competition. You know, we just talked about Brickell a short while ago. A lot of competition there. When it comes to even downtown Miami, there's so much inventory down there. It's kind of nice to find pockets of neighborhoods where there's not that much inventory. Now, design district is not on the water, I understand, but it has so many other things going for it.
So if you go slightly north of that, what's your opinion as you get up to like the Normandy Isles area and you cross the 79th Causeway and you see the developments over in that area and Bay Harbor Island as again further north?
Like North Bay Village,
Yeah,
for
North
example.
Bay Village.
Now, I actually am selling a project there for the Shoma Group called Shoma Bay. I've been selling for a couple of years. What turned me on big time about North Bay Village was that zoning change they made about 4 years ago on just a little sliver of the north side of North Bay Village. That's where they allow, I'll call it Brickell density, 150 units to the acre. And it's just a little sliver of land. That's just actually north of the JFK Causeway. When you're immediately south of the JFK Causeway, it's 20 units to the acre. David, those are houses. That's house zoning. Yeah. So what North Bay Village did was they basically protected all the single-family homes to the south. But they said, we'll allow developers to come in and really do serious density on the north, and we're going to raise our tax revenues. Channel 7, this was when I found this out, I kind of drove down here to Coral Gables, met with Masood Sojai, and I convinced him to hire me to sell Shoma Bay. Channel 7 is 13 acres of land. It's owned by the Anson family.
Yeah, I know the site pretty well.
It's 13 acres of land. Now, Brickell City Center is 11.5. We've all been to Brickell City Center.
It's huge.
They're going to recreate Brickell City Center. I'm calling it Brickell City Center 2.0 because the Anson family hasn't named the project yet. But it'll be just as mixed-use as BCC.
I've seen the renderings of it. It's in Brickell City Center on the water.
It could be 8 to 10 years before they finish it. But oh my God, you just nailed it. It's BCC, that's what we call Brickell City Center, on the water. And it's relatively uncrowded. So I think North Bay, there's a reason Bruce Eichner is developing Continuum. There's a reason Continuum.
Yeah,
too.
it's right there too.
Fortune's developing Pagani. It's a car brand.
Yeah.
I'm not crazy about car brands, but he's there. There are Related owns a big piece of land. on the water, very close to Pagani, and they're going to launch a project.
There's a lot of hinged retail that's going around key development sites. Obviously, we saw Brickell City Centre. Now, obviously, you're talking about this project up in North Bay Village, and we're seeing even like I've had conversations with the development here in South Miami, this Sunset Mall area being redeveloped, and we saw what happened when coming back to the conversation why Coconut Grove's done so well. When the Coco Walk opened, that was like, that
totally.
flicked the switch.
That's when I moved here. It was the early 90s. Coco Walk was brand new. But it's kind of interesting how history repeated itself. Since COVID, we all know Miami's gotten crowded. Living in an all-inclusive community, like the Well, if I lived at the Well, I park my car, I got a beautiful community I'm living in.
You walk everywhere.
But I can walk anywhere I want to go. How valuable is pedestrian friendly?
I think that's a key thing. Pedestrianization, when we look at choosing projects, and again, it's the day in the life.
Yeah.
My day in the life, my perfect day in the life, does not involve me sitting in traffic jams, unsurprisingly. Right. Or it doesn't involve yours or yours if you're watching this. It involves the idea of getting up, walking down European style to a cafe, having breakfast, having a coffee, going to the gym, having access to things that while I get fresh air. Mm-hmm. As you said, we have to drive with our windows up, not because we're worried about crime, but we're worried about, sweating.
Yes.
And I think that having these pivotal centers, like shopping centers, malls around us, or good retail around,
exactly,
is really key.
Cool supermarkets like a Whole Foods, like a Plum, whatever. Anything that if I can walk out of my condo and have everything that I want in my fingertips, I've got a pedestrian-friendly neighborhood. I've got future gold. Miami's not going to get less crowded.
That's for sure.
People just keep coming. So I'm keen on what you said like 60 seconds ago. Having the retail component around these residential neighborhoods is becoming not only more popular, it's going to become vital to the success of the development.
And I think it's important that when people go out and buy, that they're not just researching the building, but they're researching the infrastructural developments and who's got plans for what, because there's always a lot of promises. We were talking about, and I'm just thinking about what we've heard before with developers who have talked about areas that it's going to be amazing. Like I always used to joke, the north side of Edgewater and areas as you get into Wynwood, where they would show a rendering, and the cars in the rendering, even on the models, if you look when you go to the sales offices, they put these little models of cars on there, and all the cars are like, that's a Porsche, that's a Ferrari, that's a Bentley, where's the Honda Civic? Apart from, it's not there.
Exactly.
And I realized that there's no Toyotas. I realized that a lot of this, sometimes this optimistic or kind of over-optimistic planning of what it's like is based on their assumption of retail development being delivered in a certain time frame. And if it's not delivered in a certain time frame, then, as you said, the turkey is still a little undercooked.
Yes.
Let it mature, right? Let the gravy marinate, because these neighborhoods, and we've seen these promises, we have to be aware how long it's going to take. Coco Walk took a while. Any big mall area is going to take a while, and you have to kind of know that, but also you have to know that they can really do it, because if it comes unstuck, I was at the beach last week and I was reviewing the Ritz-Carlton that's at the end of Lincoln Road, and Lincoln South Beach as a neighborhood and that whole area in South Beach for a while became, I'm going to say, very undesirable, but it lost a lot of traction. A lot of buyers weren't buying there because the demographic wasn't attractive. There was a lot of people doing Airbnb, short-term, $50 a night. I mean, you get what you get, $50
a lot of the rowdy party crowd.
Right. And then all the retail went to Design District.
Yeah.
It all went thanks to Craig Robbins developing a really, incredible experience, an incredible day in the life for those people who want a high-level retail.
You got to hand it to him. He had a vision, and he stuck to it.
So now the question gets into, will they be able to deliver what they say they're going to be able to deliver? Because Lincoln Road needs an upgrade, and that's obviously money's coming into there. North Bay Road, where do you see the money injected in? Because there are areas that I see suffer statistically this year. Sunny Isles hasn't had a great year.
No, it hasn't.
It has not had a good year. And I think that Bal Harbour and Surfside, even though that's a desirable area, that hasn't had a great year. Further down the beach hasn't had a great year. But I feel like if retail improves, then it really will change a lot of these pockets. Where's the money flowing, Craig? Where's the retail investment?
The retail, you nailed it with Lincoln Road. There's a lot of chatter on Lincoln Road from big retailers all over the country. It's just such a beautiful piece of real estate that needs an injection of a lot of capital. But it's going to take time.
Yeah, I think there's like 70. I was doing the math, and I think when I went to the sales office, they were giving me numbers that were based off press releases. And I think it was there was a level of 3 different groups, and they were investing close to 100 million in different pockets of Lincoln Road. And I thought, great, okay, this is going to be wonderful. I love the renderings, but how fast will it take?
That's going to take
in your experience, how long does it take generally to see these kind of areas? How long did it take us? How long did it take? The design district to develop?
Oh, goodness. I sold a project in 2005 for a company called Hyperion Blue, the crescent-shaped building just on the causeway. And that's when Craig Robbins was starting the design district. It's 20 years later.
I felt like I didn't become aware of design district until it was around 2015, 2016. I remember people were buying up. Yeah,
did it for me. Design district I thought was overrated before that. Now
it just wasn't. There was I realized it changed because there was an affordability of people being able to buy warehouses and pockets for $1 million, $1.5 million, and then all of a sudden it was like 3 brothers came together and suddenly their $3 million investment went to 25 in a really short space of time.
Well, particularly during and immediately after COVID, the amount of money that came to the design district, and some of it came to Wynwood as well. Wynwood, I said I think Wynwood needs about 5 years. Design district is probably 5 years ago. If you want to take advantage of some really good opportunities, it is matured beautifully. It has evolved beautifully. I was there last week and having lunch with some real estate brokers, and just looking around at the crowd, I almost felt like I was on Worth Avenue in Palm Beach.
Yeah. It's good to cross-reference commercial to residential, I think. One of the things on analysis, it's good to look at what the commercial boys are doing to what we're doing, because they do have huge synergy.
They do, and particularly the retail stuff, as we touched on just a short while ago. The more pedestrian-friendly neighborhoods become in South Florida, the more popular they're going to be for residential, and therefore that's where you're going to see a lot of the big appreciation.
So wrapping this up, the actionable advice for the buyers and sellers, the big takeaway at the end of the day, for those who kind of want to scroll through this whole video and just come straight to the end and say, tell us what to do. Craig, tell us what to do.
Well, right
what is
now,
the actionable advice?
Listen, waterfront property is still waterfront property. That's where I think you're going to continue to see most of the action. It could be on the bay, it could be on the intracoastal, certainly the ocean. And David, I say that because the main market is still U.S. And whether they're coming from New York, Boston, Chicago, L.A., they're not going to replicate their conditions in those center city environments. They want to see the water. So when it comes to condo living, I highly recommend you go to the water. Number 2, take a look at these buildings that are 30, 40 years old, because they're starting to see some sales activity and they're very undervalued. Architecturally, they may not be as stunning as some of the modern architecture.
But value play, if you've got only a certain budget,
it's an 8.
Don't
Architecturally,
ignore them.
Amenity-wise, they're probably 8s. And from a value standpoint, they're 10s because they're undervalued. Take a look at those too. Obviously, you're going to have to make sure that the condominium association has money in the reserve account, because that's just practical, smart thinking anyway. And then when it comes to, I would say, the mainland, I do like these hospitality brands, more so than the car brands, because the hospitality brands have proven by track record they will govern the activity of the developer. In other words, the finished product, David, will look a lot like the brochure.
Yeah. So, and these large primary units that they're building, like they're building big units.
They are.
They keep getting bigger.
No, listen, I see St. Regis Brickell is now selling well. It's under construction. That helps a lot by Related. And people like those sizes because they're moving here.
Yeah. And as you put it, I think to finish off with the advice for the buyers is really be true to your day in the life experience.
It's a golden nugget that I learned from my late mentor, Tom Daly. Yeah. And when I again, I'm going to compliment you, but I saw your video presentation of the well in Coconut Grove.
Thank you.
And you may not have been aware of what you were doing, but when I was watching you present this, you were presenting a day in the life, and it was so cozy. It was so nice. It was so comfortable.
Thank you.
I think that's what most buyers eventually get to. It's nice if you start out that way.
Yeah.
And then you'll ferret out the buildings that don't offer that.
Well, that's when you get into like what you shouldn't do, because I think we put it through into it. The ones that don't offer a good day in the life experience, the ones that are short-term rentals, the Airbnb types, the small units that are mass-produced, the large-scale, gigantic buildings with lots and lots and lots of units, very high density, very small units, long timelines out to delivery, without the infrastructure around that gives you the life that you want.
2 outcomes. You won't enjoy living there, and you won't resell the unit anytime soon because you'll be competing with hundreds of other people that will be as disappointed as you are.
And then it's a chase to the bottom.
Yes.
And we've seen that.
Who the hell wants that?
And we're seeing that.
Yep.
Craig, always a
David,
pleasure.
thanks,
Thank
man.
you so
Always
much. I
good
think you've
seeing
got
you.
some gems of information now for our market. Thank you again, brother.
My man, always good to see you,
Thank
David.
you. You too.
I
And
enjoy
I hope-
following you.
Oh, thank you. And likewise. And actually, on that note, Craig's Q3 report will be coming out in a matter of weeks.
Yeah.
Do tune in and watch that. I think you're going to get a lot of good data, because that's one thing that I do know about this gentleman is he doesn't just give opinions. He uses the numbers.
I really do work hard on this, I promise. It'll be very, 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 very accurate data.
Thank you. And hope you enjoyed this podcast. Please stay tuned for another episode coming soon.